All right. It's going to already subtract the loss from your account balance. All right. So if you get stopped out, you no longer lose any more money. All right. Now, there is a thing called slippage, which means the broker can continue to have that trade run, and you actually continue to lose money. Now, there's only a few brokers I know have done that. The only one I know has done that from experience is Hugo's Way. All right, it's Hugo's Way. That's the only one that has done that to me. Everything else has been okay, but it's called slippage when the stop loss is hit and the trade continues to run. All right. Now, your stop loss positioning. Where do you put your stop loss? Now, there are three ways you can set your stop loss. All right. Spread times two, above or below the higher low of the day. All right. Above or below the higher low of the day. Spread times two. All right. All right. Behind support and resistance levels, and 20 to 30 pips from your entry. All right. 20 to 30 pips from your entry. All of these stop loss positionings, they put you out of the reach of the dealer. They put you out of the reach of the dealer. All right, so write these down if you don't have them. So all these three positions of stop loss put you out of the reach of the dealer. It's where price last was or where price wants to be, but there's a lot of rejection in this area. All right, three places. All right, so take profit, guys. Take profit. Take profit. A take profit order automatically closes an order when the price reaches a specified threshold. All right. It is an order used by currency traders to automatically close their position once a certain profit has been made. All right. To break this down, when price meets your TP, your broker will automatically add the positive profits to your account balance. When price meets your TP, your broker will automatically add the positive profits to your account balance. You won't win any more than the profits. You will automatically be taking out of profit. All right. And your take profit will be added to your balance. Type of two in the chat if you got stop loss and take profit. All right. Awesome. Awesome. All right. Stop loss and take profit. All right, our buy limit. What is a buy limit? Okay, a buy limit order is an order to purchase an asset at or below a specified price, allowing traders to control how much they pay. By using a limit order to make a purchase, the investor is guaranteed to pay the price or less. All right, and break it down to you. You are waiting for the market's price to pull back and to meet your price. All right. You're waiting for the market's price to pull back and to meet your price. This is your price, your pending order. For an example, price is in a buy and it then pulls back into a sell and it activates your buy limit order. All right. Price is in a buy, it then pulls back into a sell, activating your buy limit order. The key word, guys, you are waiting. You are waiting for price to get to your pending order price. All right, so as we watch it, price goes into a short buy up here, goes into a short buy. It then pulls back into a sell, and we have our entry for a buy limit. We have our stop loss in the red, and we have our take profit in the green. Type one in the chat if you can see the entry, take profit, and stop loss on the buy limit. Waiting for price to pull down to tag you into the market, and then it will push you back into profit for the buy. That is your buy limit. That's your buy limit. That is how you use a buy limit. All right. A sell limit is just the opposite. It's just the opposite. All right. A sell limit order is an order you will place to sell above the current market price. You are waiting for your price to pull back and meet your order price. All right. You are waiting for price to pull back and meet your order price. Once again, you are waiting for price to meet your order price. For an example, the market is in a sell and it then pulls back into a buy, activating your sell limit order. Price is in a sell and it pulls back into a buy, activating your sell limit order. Again, the market is in a sell and it pulls back into a buy, activating your sell limit order. So how do we see that? Price is pulling down in a sell. It then pulls back to a buy and going to activate this entry, all right, for a sell limit order to bring you down back for a sell and profit. All right, type a 5 in the chat if you see the sell limit, the entry, stop loss, and take profit. This is what your activating signals look like, guys. Your sell limits, your buy limits, all right, your sell limits and buy limits. This is how they are displayed. So you set it up here and you just set it and you forget it and you wait. All right. You set it, forget it, and you wait. All right. Now, pending orders, guys, pending sell limits and buy limits. All right. They are not guaranteed to go with the trend of a sell. Just because you have a sell limit doesn't mean that's going to be the trend. Price can push past that entry and go towards your stop loss. Now, things that do this are as news and basically because the pair is not done pulling back or correcting. All right. So you made this analysis of a buy limit or a sell limit, but price decides to go the opposite way as well. All right. So therefore, this is not going to necessarily go with the trend. All right. Sell limits and buy limits can activate 3 or 4 days later, sometimes a week later. All right. Sometimes a week later. All right. A lot of people do Fibonacci retracements, and those Fibonacci retracements don't happen because, again, we have pushes to the high or pushes to the low. All right. And those midweek reversals don't happen right away. So you could wait 4 days. You could wait another 2 weeks till it hits. That's why you're waiting for that pending order. All right. Because you see structure in that area and you see price was rejected in that area. Therefore, you see price hit 4 or 5, 6 times to the low or the high, and therefore it's going to again correct the opposite way in your favor. All right. Sell limits and buy limits are not guaranteed to go with the trend. All right, they're not guaranteed to go with the trend. All right, your buy stop. All right, your buy stop. Your buy stop. A buy stop order instructs a broker to purchase a security when it hits a strike price that is higher than the current spot price. Once the price hits that strike, the buy stop becomes a market order fillable at the next available price. To break this down, price is moving in a buy. You see a price that the market will hit and continue in a buy. All right, by placing your position in the current market. This is like jumping into traffic. All right, this is like jumping into traffic waiting for a taxi. All right, for your example, price is trending in a buy. All right, and your pending order is placed just a few pips above the price, above the buy price. Continuing in the same direction, continuing in the buy, continue in the same direction. All right, you are waiting for price to activate your pending and to pull you into profit in the same trend. That is your buy stop. Price is already in a buy. You place your order just a couple pips above the price to put you in profit and continue the same way for the uptrend. All right, type a 6 in the chat if you understand that buy stop, the buy stop. So what price is going to do? Price is going to pull down, and then price is going to be in an uptrend. All right, price is going to be in an uptrend, and you're going to place your order right here at this number 143490, and you're going to wait for price to tag you in that uptrend to go up for the buy. So you're going to wait for it to meet you, and it's going to go up. All right, wait for it to meet you and then go up. We have our take profit, we have our entry for the buy stop, and we have our stop loss. All right, again, you're waiting. You are waiting for price to get to that price. The same thing happens for a sell stop. All right. The same thing happens for a sell stop. All right. Sell stop. In Forex trading, a sell stop is a trader order from a trader to a broker asking that a trade be executed in the best possible price once the price gets to a stated price or below. All right. To break this down, price is moving in a sell. You see a price that the market will hit and continue in a sell, placing your position in the current market. Again, just the opposite of the buy stop. For example, price is trending in a sell, and your order pending is going to be placed just a few pips below the price continuing in the same direction. It's going to be below, all right, going to be below that price. You are waiting for the price to activate your pending order. All right, price is going to be below that price. All right, because you're going to be in a sell and you're going to wait for that price to come to you. So your price is going to be below the actual market price. How does this look? All right, again, buy stop is going to be above the price and sell stop is going to be below the price. As we see, it's below. So red, it is arrow downtrend. We have a clear downtrend. All right, we have the downtrend. So therefore, we're waiting for price to get to this level right here and put us in the market. We're waiting for price to get to 1.36408. When it gets to that level, it will go ahead and put us in the market and for our sale. It will activate us. All right, type an 8 in the chat if you see the entry, the stop loss, and the take profit for this sell stop. All right, good, 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 good. That is what a sell stop is. You're waiting for that price. All right, you're waiting for that price. Again, all these key terms and pendants, guys, is that you're waiting. All right, you are waiting. All right, write this down, guys. Write this down right here. Give you guys a chance to write that down. This is exactly what we went over. We have buy stop. You're in a buy. Here's your pending. Price is going to come to you and put you in profit. Same thing, sell stop. You're waiting for that price. You're going to put it below. Price is up here. It comes down, tags you into the market, and continues in a sell stop. For your buy limit, all right, price was already in a buy. All right, came down to the sell, came down, tagged you in, and go back for a buy. Price was in a sell, came back up for a buy, put you back into a sell. Give you guys a chance to write that down. So far, any questions on buy stop, buy limits, sell stop, sell limits? Any questions? All right, we'll continue then. All right. If you gotta take pictures, take pictures. It's okay. All right, so market executions and current market price, CMP. All right, a lot of times you'll see me put CMP, means current market execution or current market price. It means get right into the market. All right, it means click the button, get right into the market. So market execution is a type of execution in which the client places an order and specifies only the volume. The bid and the ask price of an asset is generated during the process of execution. So to break this down, click the button and you are automatically entered into the market. The difference between the ask and the bid will give you your spread. All right. The ask and the bid will give you your spread when you enter the market. So what that means is you will automatically be negative pips when you enter the market due to the spread, unless you enter during a breakout market. It will just put you right into profit because the candles are running. But when you enter the market, 99% of the time, you're going to be, your screen's going to be red, your pip's going to be negative. So you enter at $1 a lot and your spread is 3, you're going to be down $3 automatically because you have to pay the dealer. That's the way it is. All right, the ask and the bid, that's the difference. That's how you get the spread. Once you enter the market, you're automatically going to be negative. So don't freak out. You're automatically going to be in on the negatives already. So you play a standard, you're going to be down $30. You play $1, you're going to be down $3. All right. So market execution means click the button, get in a trade. CMP means get in a trade. All right, so guys, determining the currency strength. All right, Determining the currency strength. Now, this is how you determine if the market is going to be in a buy or a sell, or the possibility of it being in a buy or a sell, or even consolidation. All right. There is a currency strength meter out there for trading for currency strengths. All right. So I'll drop it in the chat, and you got it's in the Discord as well. But I'll drop it in the chat, and you guys can use it. Determining currency strength. For an example, how do we use this chart here? All right. So how do we use this chart? These charts have bars on it. 5 bar, 1, 2, 3, 4. I think it's 6 bars. I think they go up to 6 bars, 5 or 6 bars. All right. Full strength is 5 or 6 bars. Okay. Low strength is just one bar. All right. The volume of it is very high. The volume of this is very low. All right. The currency strength is very low. The currency strength is very high. So how do we read this? Okay. So for example, GBP, all right, the pound, GBP is the primary pair. All right. GBP is the primary pair, and it is weaker than the USD. All right, it is weaker than a dollar, the quote pair. All right, GBP, the primary, is weaker than the USD quote pair. This means that the currency GBP USD has a possible trend in a sell. All right, has a possible trend in a sell. Why? Because the quote pair, all right, is stronger than the primary pair. All right, the quote pair is stronger than the primary pair. Are we following so far? Type of tune in chat. We're following this. We're following so far. The quote pair is stronger than the primary pair. All right. The primary pair is always the first pair that is displayed. The quote pair is always the second pair that's displayed. All right. Another example for a strong pair. The US dollar is stronger than JPY. All right. As we see on the screen, the US dollar, all right, is stronger than JPY. All right. USD is stronger than JPY. All right. This means that the US currency, USD JPY, has a possible trend in a buy. So this USD JPY has a possible trend for the buy because the primary pair is stronger than the quote pair. All right, the primary pair is stronger than the quote pair. You can use this. All right, you can definitely use this. It helps. All right, this definitely helps you. All right, it lets you know what trend you're in. And yeah, I mean, it'll definitely give you confirmation. It'll definitely give you confirmation of what trend you're supposed to be in. Now, if these two bars the same, say Euro NOK is an actual pair, it's exotic. All right, Euro NOK is an actual pair, Euro AUD as well. So Euro AUD, all right. The strength is like as you see it, 1 bar and 2 bars. All right. So they're both kind of weak, which means that the market can consolidate. All right. If you see the currencies like this, all right, if they're 1 to 1 or 1 to 2 like this, they can consolidate. So expect a consolidation. All right. Expect a consolidation or expect one strength to start getting stronger than the other. For example, you're supposed to be in a sell for Euro AUD, but then Euro AUD starts to pull up in a buy on a strong pullback. That means that Euro strength is starting to get stronger. All right. It's starting to get stronger. You got to start finding your right trend. All right. You may be in the wrong way. All right. So again, if they're the same or equal, look for that consolidation or wait for that nice strong pullback. All right. So how do we take a signal? All right. How do we take the signal? All right. Step one. What I need you to do is look at the chart, guys. Look at the chart. So how do we take it? Step one, look at that chart and look at the signals entry. Look at the signals entry. Where is the entry on the signal? Where did the person that sent it put that entry? So go to your chart, all right, and find that entry. Go to your chart, find that entry. Step two, look where price is currently at. Is price below or above the entry that the signal was called on? Is price past it or is price below it? All right. Is price past the entry or is price below it? Remember, the market moves very fast. So by the time the communication from that signal to your phone and you see it, or 5 minutes later, you see the signal, look where price is at. It still may be good, all right, or it still is valid, or you might get a better entry. This is how you get the sniper entries because you can get a better position than the signal that was called. All right. You can get a way better position than what was called. So step three, find the proper entry. All right. You want to be no more than 10 pips from the entry that was called. All right. You want to be no more than 10 pips from the entry that was called. Meaning, if price is already past that entry in profit, you want to be no more than 10 pips behind it. If you're 10 pips behind it, you are entering the market late. All right, you're going to enter the market late. Wait for the pullback stuff. Wait for the pullback. All right. So find that proper entry. You want to be no more than 10 pips, all right, from the entry. No more than 10 pips in profit from the entry. So if that pair is in profit already and you see it's at least 10 pips, you want to wait on it. All right. You want to go ahead and wait on it. If it goes past the 10 pips, wait on that pair. You don't want to enter a market already 10 pips behind. 10 pips is a lot of pips, all right, especially for people that play higher lot sizes. 10 pips can mean you're done for the week. 10 pips can mean you're done for the day. 10 pips can mean you're done for the month. All right. So remember, 10 pips can mean a lot to some people as well. All right. So step four, if price has passed the entry, look to do the following. All right. This is where your pendings come in. All right. Look to do the following. If price has passed the entry, look to do the following. Set a sell or buy stop. Set a sell or buy limit. All right. Set a sell or buy stop. Set a sell or buy limit. Let price come to you. Be patient. Let price come to you. All right. Or hit market execution. Only do this if you see that price is not more than 10 pips away from the entry. All right. As long as you see it's not away from the entry. All right. Type a five in the chat if you understand these steps. Type a five in the chat if you understand these steps. Now, if price is past your entry, right, and it's between 10 and 11 pips, all right, make sure that you also check your spread. All right, also check your spread on your broker. Everyone has a different broker, so make sure that you're actually checking your broker spread, because if your spread is very high, someone else broker, all right, may hit TP. If I call TP, say, hey, TP has hit. All right, if TP has hit, that means that your spread is a little higher or a little lower than the broker that it was called on. All right, so make sure you're looking at your spread. Spreads are different on every broker. All right, spreads different on every broker. So if TP is already hit, if someone calls TP is already hit, all right, I would suggest you close your position. All right, suggest you close your position, because usually when price is hit, all right, when your TP is hit, the market will pull back. The market will go ahead and do a retracement and pull back. That pullback is coming. So if you see that take profit has been hit, go ahead, and you're not there, you're about 4 or 5 pips away. That's because of your spread. All right. So close out your trade, take your money, you're good to go. It's only 5 pips from take profit. It's not a big deal. It's only 5 pips. You're good to go. All right. Anything you take for the market is a good day. Anything you take for the market is a good day. All right, so other ways to get into the trade, other ways that you can get into the trade. All right, you get into the trade based on your personal strategy. All right, based on your personal strategy. Now, that means if the signal is called and it doesn't line up with your strategy, then don't take the trade. If your strategy doesn't line up with the call, then don't take the trade. Wait until it lines up with your strategy. Use that signal for confirmation that that is the trend, and then go find the trend with your strategy. All right, that is one way to also get into the trade. Use your strategy. Wait for the pullbacks to happen. If price is above or price is below, wait for the pullback and then get into the entry. All right, wait for that market to pull back and then get into the entry. That pullback will give you that sniper entry. It'll give you a better entry. It gives you a better risk to reward than what the signal was given out. All right, it gives you a better risk to reward. And last, place a horizontal line. All right, place a horizontal trend line on your chart and wait for price to simply break and retest at the signal entry. All right. This is confirmation that price is at a level of support resistance and that it will put you in profit. So drop that horizontal line at the exact signal entry. Wait for price to break and retest, which means it's going to close and retest your trend line. And then it's going to put you in profit. That is your confirmation that the price is going that way. All right. That is also another way to let price close over that trend line, retest it, and then you can enter the trade. All right, type a six in the chat if these are good ways for you to get into the trade, if you understand these, if you understand how to do these. All right, awesome, awesome. All right, So let's talk about risk-free trading. Let's talk about risk-free trading. All right, risk-free. So what do we mean when we say risk-free? All right, that means every trade that you take, you must make checkpoints. All right. So what you want to do when you're in a trade, you want to make a checkpoint for that trade. At this position, I'm going to take my money. I'm going to take half of this money. All right. So pick a position or a price that you will take profits and or partials. All right. You want to take profits and or partials. We'll get to partial in just a minute. All right. Take your money. In other words, you want to take your money and let the rest of it ride. So, how do we make this trade risk free? Step one. Step one. Put your stop loss 2 to 5 pips in front of your entry. All right. Now, watch your spreads. Watch your spreads. But 2 to 5 pips should do the job. All right. Put it in front of your entry. This now becomes your new stop loss. All right. This now becomes your new stop loss. If you get stopped out, you get stopped out in profit. You don't lose anything. Doesn't matter. The market retraces back. You lose absolutely nothing. You gain everything. That's risk free. Now, step two, if you have multiple positions, meaning you have a trade set up for take profit one, take profit two, take profit three, take profit four, however many take profits you have. All right. Take one full position's profit and make the other positions risk free, which means if TP1 hits out of the 4 positions or 3 positions, move the rest of the positions into a risk free area, meaning put your stop loss in front of your entry and make all those trades risk free. Make all those trades risk free. Why? Because the market can pull back and hit your stop loss. So why hit your stop loss when you just hit TP1 and you got 2 more positions or 3 more positions that is equal to the same risk to reward that TP1 was at? So why win and then lose 3 times or lose 2 times? All right. So make it risk free. Make it risk free. So how do we do risk free? Step three, you want to take your partials. Take partials, meaning take some profits along the way to the other TPs. Take some profits along the way to the other TPs. So risk free, write this down. Risk free, it equals take partials plus place your stop loss and profit 2 to 5 pips. All right. Take partials plus place your stop loss into profit 2 to 5 pips equals risk free. That's what risk free is. Type one in the chat if you understand risk free. You always want to make every trade you get risk free. Every time you see a trade, you want to get a chance to make that risk free. Don't ever give that opportunity up to make your have your money come back to you and go the opposite way. So you want to be a risk free trading. All right, awesome. All right. So how to take profits? How to take profits? This is going to be done on NT4 mobile. All right. So how to take profits? So step one, go to the trade and hold the trade to close it in profit. So first thing you want to do, go to the trade, and then you want to hold it, close it as you're going to close in profit. All right. The screen's going to come up. It's going to say close. You hit close. All right. Now, step two, go to the lot size and type in the amount of lots you want to deduct. Go to your lot size. The same way you put your lot size in to place the trade is the same way you're going to deduct it. Close the trade and partials will be deducted and added to your account balance. Once you close those lots, it's going to be positively added to your account balance. You then want to put your stop loss in front of your entry and let the other trade play out. All right, let the other remainder lot size play out, which means, for example, your trade is at a $5 lot size, so $5 per pip. You close at 0.25 lots, which is half of it. You close at 0.25 lots. There are now 0.25 lots left in the remainder of that trade running in profit. You're going to leave that there. Stop loss is going to be in profit. And you're going to let the remainder of that 0.25 run in profit. If it comes back to you, it doesn't matter because you get stopped out in profit. If you are trading a 0.01 lot size, you will not be able to do this. All right. You will not be able to do this. You could do this on a 0.2. All right. Sorry, 0.02, but you can't do this on a 0.01. All right. And this is done on your mobile. This is done on your phone. Taking partials is done on your phone. Any questions on how to take the signal, how to place the trades? Any questions on how to take the signal and how to place the trades on a buy limit, buy stop, sell limit, sell stop? Everyone knows how to enter on their phone. All right, cool, cool, cool. All right, good. That's all I want to go over for this portion of it, the 7 p.m. portion of it. All right, that's all I want to go over for that.